I thank the gentleman. Mr. Marchant.
Thank you, Mr. Chairman. The report says that the IRS made over 180 adjustments to institutions' unrelated taxable income due to misreporting of income and losses. Majority of the adjustments came from sources like advertising, facility rentals, golf courses, and arenas. What income was being offset by losses from these operations is question one. And can you give us some specific examples of that?
Probably I can't answer question one today because I don't have it on the top of my head, but we would be happy to go back and try and get that information to you. Let me make sure I understand exactly what you were asking. Could you repeat it, please?
Well, what income was being offset by the losses?
It varied in the institutions. Let me go back. There were about 30 different types of unrelated activities across the institutions, and the reason that I mentioned the 5 that I did was because most of the issues that we saw were in those 5. I think, though, that they were in those 5 because if you look at the questionnaire results, you will see that those were the 5 activities that the most organizations conducted anyway. So you had a much larger number of organizations doing these activities, so it wasn't surprising that there would be issues there. With regard to what they would be offsetting, the unrelated business income rules allow a tax-exempt organization to conduct its exempt activity, and it doesn't have to pay any taxes on that. With regard to activities that are not related to its exempt purpose, so you've got a college and its exempt purpose is to train folks and to teach folks, so that's all related. If you have...
Let's say they have a golf course.
Right. Let's take the golf course. The golf course can be related under the right circumstances, but it might be a mixed use. So if your students who are training for your golf team are using the golf course, that would be related to your educational mandate. If, on the other hand, you're allowing your students to use it and your faculty to use it, but you also allow memberships from outside individuals, the money that you get from those outside individuals to use it is unrelated to your educational responsibilities, and so therefore it becomes taxable. So in one organization, one type of activity, you could have both taxable and non-taxable activity, and you can allocate your expenses among those. But let's take the golf course. Let's say you had a golf course that was making lots of money, which was not what we saw here. But if you had a golf course that was making lots of money and it was unrelated, you would owe taxes on that. But you also have a parking lot, which is also not related. But you are losing your shirt on that parking lot. You can offset the gains in the golf course with the losses from the parking lot. And that's how you get to what you have to pay tax on.
In a consolidated state.
In a consolidated way, yes. It's no different than a taxable business. Taxable business may do lots of different things, and it has all this big pile of gain, and it has a whole bunch of deductions, and it applies the deductions against the gain, and the bottom line is what you have to pay taxes on.
And what role do outside auditors play in the function of auditing these consolidated statements? They have to have independent auditors that come in and audit the books. Do the auditors certify the accuracy of the compliance to the tax return?
I don't know the answer to that question. I would imagine that they certify to something, but I'm not sure the accuracy is what they're certifying to. I'm not the right person to answer the question.
So you've got big accounting firms. If these are big universities, they've got undoubtedly a big accounting firm that's coming in and auditing their financial statements. And I serve as a trustee of a small university, so I rely pretty heavily when I go to the meetings on those audited statements. But this university has no outside entity, so I wouldn't worry. But if I were on a trustee of a big university, I would want the auditor to also certify that the university was compliant in its tax returns. And maybe some education at that level might help.
Thank you.
Thanks.